Good morning, everybody, and welcome to the Locking Your Success Trading Market Update for July 28th, 2014. Before we get going, we would like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please note that the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. And throughout the presentation, we're using computer simulated trades, which are believed to be as accurately represented as possible, however, may vary from live results. If you're watching this on YouTube or some other venue, come on over, check out our programs, M3 Bearish Butterfly Rock, M21 group coaching, and as well as the Trading Triangle and one-on-one coaching programs. Join our mailing list and get the free report, 7 Secrets to Become a Successful Trader, and sign up for the free weekly webinar. And make sure you stay tuned for our programs under development. Let's take a look at what's going on in the markets. So last week I was saying that there were conflicting patterns between the indices, which essentially means that the markets are in confusion, and therefore any directional movements are basically going to be news-driven and not very predictable. That is until a point where one of those news-driven events or news-driven moves actually breaks some sort of a significant technical level, in which case everybody will jump on board and just start moving the market in that direction, which did not happen last week. You know, with all that confusion in the markets, I did give you a market bias, and I said that I thought the market was likely to rise last week, even though the futures were down on Monday. What we got was we got the NASDAQ higher for the week, we got the Dow down for the week, and we have the Russell and the SPX, which are relatively flat for the week. And that makes complete sense with what was going on. So as of right now, really nothing has changed in the markets. We're still in a state of confusion as far as the charts go. The futures are up this morning, but that doesn't necessarily mean anything at this point. And we're still going to be news-driven. I would say lack of news, the market goes up. Bad news, the market goes down. And until we break some sort of an important technical level, none of those movements really mean anything. So going forward, as I was saying, nothing's changed. I'm still biased that the market's going to go up in the short term. However, I do believe as far as the Russell goes and the market in general, it does have unlimited potential. So I wouldn't expect it, although I expect the Russell to be up, and even if we get good news, it may be up significantly from where it is, I would still expect us to hold our sideways range and not really break anything above 1220 with an up move. And then any down move really should be contained to the 1110 level. So that's what I would think for range going forward. But again, as of right now, there's really nothing definitive in the market, and we're still kind of going to be chopping around until we break some sort of a technical level. All right, so let's take a look at our trades. So last week, oops, sorry, this is not the right account. Let me go to my other account, please. Hold on one second. Last week we had a bearish butterfly, and I'm not showing this yet. I'll show it as soon as option view comes up. But we had the bearish butterfly, and we were saying I didn't really like the position. It was in 1/3. We got rolled back. My market bias was up, but nonetheless we stayed put because that was following the guidelines. So we simply followed the guidelines, and on Friday when we got that down move because of the news, I ended up being able to close this trade. So the August bearish butterfly, as of Friday morning, so as of 10:30, this was the position we're sitting in. We're up about 4,700, and we're nice in the center of the position. We were 21 days to expiration on Friday, and on 21 days to expiration, we do or can take our reduced profit target guidelines. Since I was in 1/3 of the position and I was up over 10% a little bit later in the afternoon, if you look at the T-log, it was actually about 1220. I went ahead and just closed this out at a $5,400 profit while the market was down and the pricing was reasonable. So another good trade, not a spectacular trade for the bearish butterfly in August. It traded straight by the guidelines, but certainly a nice 10% profit. And it wasn't very difficult to manage, so I'm very, very happy with that trade. And that puts another positive one in the books for August for the bearish butterfly. So the other trade we had on is the August M3. And again, we didn't have a whole lot of price movement. So if we go to the August M3, we didn't have any adjustments whatsoever. So let's take a look here. As of the end of the day on Friday, this was up, I think, around $4,000. So here we are, up $4,000, minus 22 delta, no adjustments for the week, and this is what our analyzed graph looks like here. So everything's going well here. I will close this trade this week if we get near our $5,000 profit target. If I can get that at some point intraday, if I'm around, I'll close this out at a 10% profit. If the market really runs, we should be able to hold. We may not get a 10% profit, but we should be able to hold a really decent profit into the month. So very, very good chance this is going to be a good positive trade for the month. And what else we have for August? We have our August rock trade on, which was entered as an M3. And I don't believe, oh yeah, this did get one adjustment this week on the 22nd, which is Wednesday, when the market was up. I was exceeding some delta guidelines. Let me tie these trades together. I was exceeding some delta guidelines, so I ended up doing a 1120, 1130 put vertical with 10 contracts. And this is what the current position looks like. We're a nice flat delta, and this is looking really well also. It's still a long ways from being closed because it's only up $1,000, but a really nice, healthy looking trade. Of course, if the market really takes off, we'll probably end up turning this into a rock configuration. The market gets somewhere up around 1180 or so. So that is what's going on with the rock trade. And the last August trade we actually have on would be an August V Condor, which is looking, I don't believe that had any adjustments this week. Let me check. No, nothing this week. This during the last couple of weeks, we've bought back a couple of these puts because the market's been down. And if we look at our analyzed graph, this is still a fairly healthy looking trade. It's not going to withstand a really hard extended down move, but it'll withstand a decent down move. And if we bounce up and we start hanging around on this level, this V will be raised. It's not going to be unless if we get into this grinding market, where the market just kind of grinds up to the 1240 area or 1245. This would be a very profitable trade probably for the month, but that's not likely to happen. I'm thinking what's more likely to happen is we bounce back up to the 1200 level and we kind of hang into this range here. And if that happens, then we're just going to gradually raise this V up. Probably take less than our regular 3,000 profit, maybe 1,500 or so. But this trade still looks good. Everything looks fine, and looks good going forward. And that's all we have for August. So we have one August trade that's closed. We have another August trade, the M3, which is near being closed. The August rock trade, which is just kind of starting out. And we got this V Condor, which will probably end up expiring. So let's just kind of move on to September. So September, we'll go to the V Condor first. That is down here. This had, let's see, nothing, absolutely nothing. No adjustments here. Position looks like this. If you remember, I did set this back a little bit further down than the other trade because I didn't want to have a problem with the August position and the September at the same time. So we're bumped up into this level. A nice grinding up movement would be nice for this. We wouldn't want a very capitulation whipsaw type of a movement. That'll draw us down too much. But if this grinds up, it'll look very nice. And of course, like I said, if the market thinks we're a long ways from pulling anything out of the center of this. The market would have to hang in this center here for probably 2 weeks before we actually started raising the V here, 2, maybe 3 weeks. So as of right now, I don't see anything. I don't foresee doing anything to this trade. And I entered 2 trades. I entered a September M3 trade, 56 days, because we haven't done a 56-day M3 for a while. So I decided we'll do a couple of those because people were asking about them. So I entered this one 56 days plus excellent excellent looking graph on the M3. We could, for the first time in a while, because the volatility is actually up a little bit, we could actually just do a set of butterflies and a single call. So I'm sitting here at the 1120 butterflies. I have a single call on at, let's see what that strike level was, 1070. I have a delta that's pretty much completely flat. This is beautiful. I get excited when I see this stuff. So, no problem here. This, if the market takes off, we have some nice downside room, and the market's already been down quite a bit. So, this is just a really nice high probability trade this month. I'm liking that. And let's see here. I also went in. It's 56 days to expiration, so we also went into the September bearish butterfly, which happened to be at the same strike level, 1120. So if we come down here, entered the 1120 butterfly with about $10, which is a really nice price. I like the price level of $10. Delta of minus 84, theta of 76. Those are still some really good numbers as well. As far as whether I like this entry or not, I'm kind of mixed feelings about it. I don't like that the Russell's been down. I do like that the volatility is high and my delta is relatively flat, and I also like that the Dow, the Nasdaq, and the SPX, they haven't really reset. So if we come back to here, when we're looking at the SPX, this has not had a reasonable pullback. We've been kind of going relatively sideways, yet creeping up, and we are at the 20-day moving average. But this is things really, really overdue to come down and touch this level down here. It's more primary trend line of at least 1950. It's a 28-point drop. That happens, it's going to draw the Russell down. So we're overdue for that. The Nasdaq is still extended over its 20-day moving average, so that has a limited upside potential as well. If you look at the weeklies, this thing's been grinding up for a while. The Dow, on the other hand, we had a decent pullback in the Dow last week. This is probably going to bounce. It's probably going to bring the markets up with it. But still, it's only likely to bounce maybe, even if it goes higher than, if it breaks resistance here at, I don't know, what's about 17,150. Even if it breaks that, its upside from there is going to be kind of limited, maybe to 17,250. What I'm saying is the Russell's likely to go up, but it's not likely to go up enough to really bother you too much in a bearish butterfly. So if I was just looking at the Russell, I'd be a little bit nervous that we might have another one of those extended runs and break all the way to 1250 or 1275. But looking at the other indices being overextended, even if the Russell goes up, I think the upside is going to be limited to this 1215 area, and I don't necessarily think that's going to be a problem for us on the bearish butterfly. So I do kind of like the trade this month, although, like I said, it could go either way. If during the trade, what am I looking for during the trade? If during the trade the SPX comes down and sets, actually has a decent retracement, maybe down to a 50-day moving average or this trend line, and at the same time the Russell just kind of sits here, it doesn't move a whole lot, then I'd be concerned with the Russell breaking this 1215 area and maybe coming up to 1250, 1275, and that would be definitely a concern for the bearish butterfly. So what I'm doing, on my trades where I'm actually taking market direction into consideration is I'm watching for that reset in the Russell or in the Nasdaq, or both of them would be a very good sign the market's going higher. In which case, I'd be interested in doing something to, hedge off my upside. But as of right now, I'm perfectly fine with the way things are. So that's all the trades that we have on. So, I wish I had more information for you, but, like I said, the market's still in confusion, chopping around. Not a whole lot going on. Not a whole lot of predictive value there, and there's not a whole lot going on in the trades either. So. All right, so for questions, I have just a couple here. So Andrew, when the calls or puts get cheap, do you ever take one side of the risk off the V Condor? No, I usually don't. V Condor, I just leave the darn thing alone. Usually if the calls or puts are that cheap, it's because they don't really have any risk of being hit. So I'm not going to give my money back to the market. I know that's a little contrary to what some other people tell you. They say, hey, if you can buy it back for 15 cents, do it. I just assume if I'm near, if I need in other words, if I have capital tied up and I want that capital for another trade and I can buy it back for 15 cents, there's no point in doing that because my capital's better off going somewhere else. But if I'm just doing a regular trade and I don't have any place else to put my money, I might as well take the whatever's left in that spread and expire it. So that's what I tend to do. All right, in the August M3, if the market pulls back hard enough to make an adjustment, would you roll a condor? Oh, okay, I see what you mean. Okay, so in the August M3, if the market pulls back hard enough to make an adjustment, would I roll the condor back to a butterfly at the 11:30 strike or move the entire structure down 20 points or so? All right, so I think this is just a question of how are we going to manage this if the market goes down. So if I go to August M3, we're sitting like this. I already have a gamma trend problem with the upside. Not that concerned about it because I'm kind of in the middle of the position, and I have time to straighten this out. So even if the market comes out today and it goes up 20 points to 1165, that's not a big deal. I add some verticals and I can flatten this line right out. It's not an issue. So to the downside, if I were to take this and do something like this, right, which I would tend to avoid doing, I create a really big problem to the upside. Again, would I consider doing this? In the market the way that it is now, when the market's moving relatively slow, yes, I would consider doing it because even if we get a bounce here, it should be limited to 20 points. So if the market shot back down a little bit, I would consider this in this circumstance, knowing that I have a severe problem up here, and when the market starts going up, I'd want to correct that very, very quickly. If this was a different market, if this was a fast-moving market, say the market was up at 1235 and we dropped 20 points, and we dropped another 30 points, and then we dropped another 30 points. In those markets, you have a very real possibility of having a 40-point bounce in one day, maybe even more. So if I'm at like 11:35 or something, and I get a 40-point bounce, I'm going to 1175. It's going to take all my money away. In that case, I would not be interested in doing this move. In this specific circumstances here, I would be interested in doing this move just because the market's moving relatively slow. So that's one thing that you could do. The other thing you can do is, which I would consider doing, is moving back these spreads. So here's something that I like to do. You just take this back. This is the easier way to deal with it. You just do this condor, right, and you roll that 120 points back. You're still going to create a problem to the upside, right? So to fix that problem to the upside, you can just roll these back. Plus 10. Right, and that flattens our T plus 0 line. So that corrects our delta, it flattens our T plus 0 line. And now I'm still in a nice looking M3 type of a trade. So I'd be interested, that would be the easiest way to do it. But essentially, yes, I am rolling the whole condor structure back. And I can do that in a couple moves if I want to. So I'd move back the spread and then take off my upside risk to flatten it out to the upside. That's probably how I'd manage that. So you can see how I flatten my gamma trend. It's a nice little trick there. Okay, so clear that out. Could I please scroll through the full T-log for the August bearish butterfly? Yeah, sure. So the August bearish butterfly, if you remember, we started at 1160. We rolled to 1180, started at 1160, we rolled to 1180, I should have added a 1200. So at 1180, 1200. Then we dropped the 1200, and then we rolled back to 1140 with the big down move. And then how did I get another 11? Oh, then I closed the 1140. So that's essentially how that went. So if you remember right, I said I would have never rolled to the 11 from the 1160 to the 1180 1200. I would have stayed in the 1160 and then just added the 1180 if we were taking technicals into consideration, because we were pretty sure the market was coming down. Maybe not as far as it did, but we were pretty sure it was coming down a reasonable amount. So we never would have done that, and that's why we ended up getting kicked backwards, and it took a little longer to get our profit, but that's essentially how that trade went. Okay, is there any particular reason why you always look at the T+0 and expiration lines on the graph rather than 3 or 4 lines? Yeah, essentially because the predictions are, well, to put it frankly, crap. They don't really mean anything. The market makers are going to price things where they want to, and they can hold stuff at today's current value for 2 or 3 weeks, and they can hold stuff at, or they could even make it worse. So, you know, if you made the assumption that the market makers were going to hold to the theoretical model, then I'd put a little more emphasis maybe on 2 or 3 days out. But the reality is that they're just going to price stuff where they want to, and or whatever they can get away with, and it doesn't really mean a lot. Just like if you're looking at if we just do a September 14 September. You know, just like if you're looking at this here, you know, this just doesn't mean anything. Also, if you change in your volatility, this prediction is completely garbage. There's no point in even really looking at it. It doesn't really mean anything. So, I mean, you can play around with it sometimes, and I will look at them sometimes, but knowing that they don't mean anything. So that's why I don't like to put emphasis on things that are not important, and that's basically not important to me. All right, so would I mind putting the T-log for the bearish butterfly back up on the screen for a few seconds? Oh, yeah, sure. Let's see if I can find it. August. Close this. I'll just put that up there. Yeah, I know you. Yeah, you can't see everything. Yeah, there we go. All right. In the type of market we have now, would an M3 or in September or August be a better trade? I usually like going further from expiration. I wouldn't enter an August M3 now. We're only 21 days to expiration, unless you like to trade close to expiration. It works fine, but you know, I'm looking to get out of my August M3 as soon as I can. The market's been relatively sideways for a while, and when it takes off, if it breaks its technical level, it's going to really take off. So if that were the case, I'd rather be in September than August. And okay, let's see. Assuming we were putting on the trade last week when September was 56 days to expiration. Yeah, right. I'd still rather be in a September trade today than any other trade. And I hope that answers your question, Casey. But yeah, I'd rather be in September. And that's all we have for questions. So I hope that was informative for everybody. And I'm excited to see the August trades, see how they work out. Should be closing them fairly soon for the most part. And have a great week, everybody, and we'll talk to you next week.